Hello and welcome to Wyckoff Training Academy. This is the I think this is the third video in the series of Master the Market training course. In the last video, we have seen WD Gann and Wyckoff market structure version 1100. So, all in all, we have six indicators. One is pertaining to WD Gann course, which I had planned to record in my third recording, but I've changed, I've made some change in the plan. So what I'll do today and tomorrow, I'll release two videos. In that videos or in those videos, I'll be covering the indicators because from Monday onwards, I would be recording and uploading videos on a daily basis for 3 4 days, which would be fully dedicated to WD GAN and how do I analyze and how to plan your trades accordingly. So, without any further ado, we'll dive into the second indicator, which one is. So, we have four indicators which we have to look at, which we have to or which we have to study. So, today I'll be covering two indicators, and tomorrow I'll be covering two indicators. So now this is WT GAN and Wyckoff tape reading tool version 1200. So this is like this is basically it plots a buy and a sell level, unlike 1100. So let me get my pen. So what it does, what is the objective of what one can expect out of this indicator? This indicator is basically planned and it's been made for traders wherein they are looking out for minimum risk and maximum reward. That means your risk should be minimum and your reward should be maximum. So, how you have to plan your trades? So, like in case of buy, whenever there is a buy signal appearing over here, let me zoom in so that uh, things get bit much more clearer to you. Like for example, on this particular candle, this uh, one candle delay or some in some cases because I have four indicators, so some cases in most of the cases there is a one candle delay, but there is one indicator which takes a longer time depending upon the market situation. So in this particular case, what we have to do, how you have to buy, you have to buy when the signal plots. Like for example, it is pertaining to this particular candle, even if it has plotted or it has come up to the chart on this particular candle, you have to buy on the close of this candle. You have to place your stop loss underneath the label. I'm not talking about the low. I'm talking about the label. And even if you want, even in initial stages, you can use the recent swing low, or either you have second option of label, and third option is underneath the low of the swing candle. So either ways, it is up to the trader who, based on his risk-taking appetite, he can place the stop loss. He or she can place the stop loss. So you're entering over here, you're placing a stop loss here. This is the amount of price movement which has happened. So what do you have to do? You have to like I always tell everyone, every single trader of mine, like to follow their risk to reward calculation. Like for example, once I uh, get 1:1.5 or 1:1, I bring the stop loss to break even, or I book my partial profits. Then I wait for 1:2, then 1:3, and so on. So in coming sessions, like in the end, when we would be concluding the course, at that particular point, I would be recording a a special video for how to trail the stop loss on how do I trail the stop loss and how I tend to book the profits and how I uh, plan my entries and exits because I have a different technique for entry, which I would be based on WT Gann, which I would be taking covering in the later session. So based on this tool, you have to buy here. Ideally, place your stop loss below the level or below the swing, or if you want, you can place below the low of the candle. But if you place below the level and if you place below the recent swing low, in case of buy, you are giving yourself a little bit room and you're giving space and room for the price to at least if it is coming back and then it is going upwards, so you are not out of the trade. But again, it depends because in some situation you might want to keep your stop loss tight because of many a number of reasons. So if you're wrong here only. If you lose uh, don't lose more money compared to what you're booking like what losses you're booking at this particular point. So and your reward is maximum. Again, 1:1, 1:2, 1:3. At times it can go up to 1:10 also. It depends upon the market and how it performs and how the things roll out. And same thing goes for the selling opportunity. Like for example, you're like you're selling over here. This should be your stop loss. Or ideally, this is the recent swing high. This should be your stop loss. Or either you can place your stop loss here or selling here, and this is what market did and how this is the market like this much of profit was would have been made by the traders who are using this thing. So this is the one way of doing trading on this particular point. Another way of doing is like you have to draw a line, let the market come up to this particular level, then it retraces back, then you plan your buy. At times it will happen, market will not come up to the level and it will turn uh, before reaching this or before touching this level. So these are the nuances. Even if you want, you can go for the trade, but you have to set your rules. You want a perfect touch, or certain you want to keep certain buffer. Like many people like to keep buffer of 5 points or 10 points or 2 points, depending upon their appetite of risk taking appetite. As soon as the price reaches gets into this particular range, they buy it and they place the stop loss underneath. And there are many other different other traders who like to see the price touch to the particular line, and then there are a reversal candle. If you're using my 155 version, you will get a green candle with green triangle. That is demand greater than supply. Then you should enter on the close of the candle and so on. And same goes with the one second. Same you have to apply on selling buying. So once you get a buy trade, if price goes below, let the price settle down, then it comes back and tests this particular level, and then you sell short at this particular point or short sell at this particular point or particular level. So again, if you're using my 155 version tape rating toolkit, Wyckoff tape rating toolkit, then if you get a selling or red candle with blue triangle, that means supply greater than demand. You would short sell on the close, and that would be your stop loss. So this is simple. All my strategies are two-way strategies. Either you buy at particular level, or either it is broken, it is tested, and you sell at this particular level. Or either you sell at certain level. If it is broken, price comes back and test it, and then you buy it. So these are my two favorite trade setups or trade entry criteria which I had selected for my trading and which I found to be very profitable and unique. And the second way is what I normally like to see, because once you are disconfirming there is buy in the market, that means the prices are about to go downwards, and you can get into a trade with high, you can say, with higher quantity as compared to previous normal trades, because you are sure, because all these tools give us an assurance that if it is not going upward, then definitely it will go downwards. So it gives you a main pain area of the price wherein your odds are in your favor. If one thing is disqualified, then other thing is qualified to happen, and it will happen, and alhamdulillah it happens. So this is how this particular tool has to be traded in short and simple way. So now I'll come down to my second mm, indicator, which I'm going to talk about. You can see that, and it can be applied on this 1100 and 1200 can be applied on any time frame. They don't have any issues, or no time frame foundation is there, uh, irrespective of any instrument, anything. So now I'll come to this is something which I will be discussing. And all these indicators are being issued based on, like, with the alerts. So you'll get alerts whenever the signals are being triggered. So now we'll discuss about. I have introduced you can say trading edge series of indicator. Uh, these are trading edge series indicators to getting your trading edge. So this is a major buy sell climax WTA trading edge in series version 2. So how you have to trade based on this tool, and what is the uniqueness of this tool? This tool comes along with a red and green color candle calculation. Based on the calculation, if it sees that, I will not get into what calculation is all about and other things, because here we are only here to discuss uh, where to buy and where to sell and how to use this indicator. So, for you, just for sake of your understanding, green candle means there is prices about to go upwards, and red candle means prices are going to go about to go downwards. Like Wyckoff tape reading toolkit, this has also been developed based on major portion of WD Gann, and so some portion of Wyckoff, that is demand and supply, has been used for computing this particular candlestick. So you don't have to color in your normal candle. It would automatically uh, get color of green and red uh, when it comes to candles. So when a major cell is appearing, this label is appearing along with the alert. That means this move has faced some exhaustion, and we can see a price turn and price might go upwards. When a major buy climax appears, that means there is high probability that price might go downwards or either might go down sideways. Same is the case with major sell. Either price would go upwards or either it may go sideways. Now, how to trade based on this? Same. When you get a signal, and you get a green candle, you buy here, you place your stop loss here, and this is how far market went. When you get a sell signal, or when you get a buy climax, that means you have to sell at this particular point on the red candle, close of the red candle, and place your stop loss, and then wait for the market to give you whatever or risk to reward you're expecting, or either whatever trailing stop loss you're putting, or either you're sitting with a fixed uh, take profit strategy, which we are going to discuss at the end of the this course. So This is how it has to. This signals has to be traded. And as I mentioned earlier, either you buy here, break down, test. When you get a red candle over here, you short sell. Same goes over here. You sell here. If it is broken, tested. If you get a green candle, this particular candle, you buy here. Your stop loss would be under below this level or above this level. So now, when it comes to this thing, your stop has to be adjusted if there is some kind of swirling, some kind of swell move, or you can say back and forth move of uh, above and below this particular level. Then you have to consider the major swing high. Not far, like it shouldn't be the case like the swing high is here and you're planning your trade over here. So this doesn't make any sense at all. Placing the stop loss at, like too far away from your selling price or buying price. So you have to apply your due diligence, and then based on that, you have to place your stop loss on target. So let us see some signals in recent, like recently we got two signals. Now you can see this particular. This was the trade setup. This is the trade setup which I was talking about. We got a major sell. That means we have to buy. We bought at this candle. This was our stop. This was the market move which happened, and I think it yielded 1.15. So at least we would have got 1:1 in this particular trade. Then I drew a line over here. Price has broken below, came back and tested it. So now this is a very tricky situation. Many people they get confused. Sir, should we consider? Many of my students they get confused. Sir, should we consider this to be a pullback? For some, this might be a pullback. For some, this might be a pullback. It depends upon how do you define a pullback. So with various people, there is various like definition based on their market view and based on their understanding. So sorry if I'm in today's video if I'm speaking a bit fast because I have to cover two indicators. That's the reason I'm speaking fast fashion. So if you face any issue, you can slow down the video and you can watch it. So for me, ideally, I prefer a swing low between 2 points and a swing high between 2 points. This would be a high and this would be a low. So whenever if this has to be a support, then I consider a swing high. That makes it, and if this is a resistance, then I like to see this to be a swing low. So in that case, this would be based on my understanding. But for some people, they might also see it like this. This is also kind of a swing, a micro, like a mini swing, you can say. So either ways, if you are entering, enter with dedication and enter with without any doubt. If you are losing, no issue. Again, if you are wrong, then you will get another opportunity. If you are right, then you are going to win the trade. That's it. It is as simple as that. So these are the things which I normally don't speak in uh, normal classes. Like for example, over here, this was an excellent trade, and again, this turned out to be a very excellent trade. Even if you like, uh, this was the portion which went above this particular level, and you would have shorted at this particular point over here. But again, this is the portion worth paying attention because this is not mere violation. It could be a trend reversal. Though market went downwards, we don't know because when we are planning a trade at this particular point, this is which is hidden from us, which is this is history, and we don't know. This is a mystery actually. This event has not unfolded, so this market transaction has not unfolded. So at this particular point, it is very difficult to decide whether to go for a trading opportunity, initiate a trade or not. So even if you are missing out trades, if you are skipping certain trades, don't worry, market will give you ample of opportunity because your account will dry out someday, but market will not stop giving you opportunities. So the longer you stay into the trade, the longer you earn, and you have a probability of winning the market. Like for example, this is a breakdown, a test, a sell candle, price went up till this particular point. So this was a selling situation, and again we got a breakout test. We bought here, we were stopped out, or in this particular, the way I would teach you to manage your trades, you would not stopped out, you will not get stopped out. At the end of this course, I'll show you the technique how to trade a stop loss so that you can minimize your uh, or you can become a very good money manage like when you trade manage like you can manage your trade in a very efficient way and efficient manner. So I think I should end this video because it is almost 21 minutes. So watch this video again and again. Tomorrow I'll be uploading one more video from Monday onwards because the reason I skipped it to Monday, not today or tomorrow regarding the WT Gann because there are many people who are about to join. So I don't want those people to miss this thing. And from Monday onwards, I'll be make tomorrow. I'll be making a new announcement for people who have joined this course. They would be getting additional things, uh, uh, access to my trade room, wherein they would be getting signals uh, uh, and how I trade and where I trade. They would getting the signals of XUSD and BTC, USDT, Bitcoin USDT. So thanks a lot for watching the video and see you tomorrow. For Monday I'll be starting the WT GAN. It would take around 2 or 3 sessions to cover it, and hope so for the best. Uh, Thanks a lot for watching the video. If you have any doubt, you can just uh, drop me a message.